Financial guru Dave Ramsey is famous for telling people to cut up their credit cards and close all of the accounts. But should you take the plunge? Hello and welcome to Practical Personal Finance. My name is Andrew Shear, and this is where I give you the information you need to understand and succeed with money. If you're on the path to debt freedom, the idea of life without credit cards can be frightening. Today, I'm going to tell you about why Dave Ramsey hates credit cards so much and why other personal finance experts would urge you to hang on to them. Finally, I'll give you my thoughts and suggestions to help you decide which path is right for you. Remember to give this video a thumbs up, and if you're new here, show your support by hitting that subscribe button. Who knows, you might just learn a thing or two about money. Let's start with a little bit of background on Dave Ramsey. He's been dishing out personal finance advice on his daily radio show since the mid-90s, and he was a financial coach long before that. If you aren't already familiar with Dave, here's a little bit of what he's got to say about credit cards.
The credit card is the cigarette of the financial world. You're going to hand me a nickel in front of me while you're picking a $100 bill out of my back pocket and call me smart. It's the biggest scam in freaking history. Think, people. Think.
As you can tell, Dave Ramsey and credit cards are a lot like oil and water. They don't mix. There are really good reasons why Dave Ramsey doesn't like credit cards. For starters, Dave despises debt, and the total amount of credit card debt in the US is over $1 trillion. That's like if every single person over the age of 18 in the US owed $4,000 on credit cards. The average US credit card holder has at least 4 credit cards, and most credit cards have an interest rate between 15 and 20%. That means the average adult in the US pays over $50 every month in credit card interest fees. On top of that, several studies have shown that people have a tendency to spend more money when they're using a credit card than when they're using cash. Back in the early 2000s, there was this famous study conducted by a pair of professors at MIT. They offered participants the opportunity to purchase tickets to an otherwise sold-out basketball game. They told some participants that they could pay with a credit card, and others that they could only pay with cash. The people paying with a credit card were willing to pay twice as much as those who were paying with cash. Around the same time, restaurants like McDonald's and Wendy's were just starting to accept card payments for the first time, and something really interesting happened. Both restaurants reported that the average check was significantly higher for credit card orders than for cash orders. In the case of Wendy's, the average check amount increased by about 40%, from about $5 to about $7. Now that is a big deal. When Americans pay over $12 billion in credit card interest every month, the primary beneficiaries are big banks who provide the credit cards and hold the debt. And when we spend more and more at fast food restaurants and big box stores because we're using credit cards instead of cash, it's those big businesses who are benefiting the most. This, in a nutshell, is why Dave Ramsey hates credit cards. They serve to enrich the wealthiest banks and corporations at the expense of the little guy. They encourage us to spend money we don't have on things we don't need to impress people we don't really even like. And when you think about it that way, it's no wonder he wants you to cut them up and get them out of your life. Then there are other personal finance experts like Ramit Sethi who actively encourage people to use credit cards. Ramit in particular suggests doing as much of your spending as possible with a credit card in order to take advantage of credit card rewards programs. Think about it this way. Whether you pay with cash, a debit card, or a credit card, the price for something is usually the same. But when you make purchases with a credit card, you're usually eligible for 1, 2, or even 5% cash back, depending on which card you're using and where you're shopping. If you're paying your credit card in full every month, it actually costs less to shop with a credit card than with cash, because you're getting those cashback rewards. As an example, let's say you want to purchase a new refrigerator. The price of the refrigerator is $1,000. You could pay with cash, or you could pay with your credit card. If you choose to pay with cash, you would take out $1,000 from your bank account and simply purchase the refrigerator. If you choose to pay with your credit card, you swipe your card at checkout and you get the refrigerator, and 2% cash back. In this case, you get $20. When you pay your credit card off later this month, you use that $20 cash back along with just $980 from your bank account to pay for the refrigerator. By paying with your credit card, you saved yourself $20. Strategies like this seem to make sense, but they're at odds with the advice from Dave Ramsey. It begs the following questions. Who should you listen to? Should you cut credit cards out of your life like Dave says? Or should you listen to Ramit and try to use credit cards to your advantage? Before I answer those questions, let's take a quick look at a few pros and cons with credit cards. On the positive side, as I mentioned earlier, when you use a credit card, you have access to the rewards programs they offer. Depending on how much you spend, you may be able to rack up a couple $100s per year in cashback rewards. That money could be set aside and used to cover irregular purchases like birthday gifts. This could help eliminate fluctuations in your spending, leading to a more consistent monthly budget. Credit cards also provide an extra layer of protection for your bank account. If you use a debit card and it's compromised, you can usually get your money back, but your bank account might be drained for a few days or weeks while the bank sorts things out. If you use a credit card and it's compromised, you can dispute the charges and you still have full access to the money in your bank account while the credit card company works out the dispute. It's a simple yet effective insurance policy against card theft. Finally, credit cards, when used responsibly, can help establish your credit history and your credit score. A good credit score will make life a lot easier if you're planning to purchase a home with a mortgage. On the negative side, if you don't plan your spending carefully by using a monthly budget, it's really easy to overspend on a credit card. You don't feel the same emotional effect when you pay with a credit card that you feel when you pay with cash or with a debit card. Because of that, you're liable to spend more than you intend to, and more than you can actually afford. So, should you follow Dave's advice and perform plastic surgery? As with many things personal finance, I believe it all comes down to you. I think credit cards can be valuable for both the cashback rewards and for the extra layer of protection I mentioned earlier. I've had my credit card compromised on several different occasions. While it was inconvenient to contact the credit card company and dispute the charges, I did not suffer any financial effects and my bank account was untouched. Had I been using a debit card, I might have struggled to cover my rent or utility bills. I would encourage you to use a credit card if all three of these factors are true for you. First, you're creating and sticking to a monthly budget to plan your purchases in advance and avoid excess spending. Second, you pay your credit card in full every single month, or better yet, every single week. And third, if the cashback rewards and extra layer of protection are worth the extra effort of planning your spending carefully and making sure your account is paid in full. If any of those three things aren't true for you, cut up your credit cards and close the accounts today. If you're not creating and sticking to a monthly spending plan, cut them up. If you're not paying your account balance in full every month, cut them up. And if you feel like the juice is just not worth the squeeze for the rewards bonus, cut them up. What do you think of Dave Ramsey's advice on credit cards? Do you use credit cards? Or do you operate with a debit card only? Let me know in the comments. If you found this video useful, give it a thumbs up and consider supporting my channel by becoming a subscriber with notifications turned on. Thanks for watching. I'm Andrew Shear, and I'll see you next time.